These are not normal days and things must be done differently, states Dr. Adam Mugume, the acting deputy governor, Bank of Uganda.
We have reduced the policy rate from 9 today to 6. And if you look from 2016, we have moved from 17 to 7. Commercial bank rates have remained around 20. In some commercial banks, they have actually increased in May. So the question is, we are in unusual circumstances. The central bank has stepped in by providing liquidity for commercial banks that want it at lower rates.
Dr. Mugume wants commercial banks to lower interest rates after the central bank lowered the central bank rates in June. BOU faults commercial banks for being insensitive to its customers, especially the business community, who are grappling with numerous challenges due to the coronavirus pandemic.
Hold on, please. Your cow is sick. If your cow is sick, do we milk it until it dies or it produces blood? Or you also give it some leeway? You can go off and starve at the commercial bank. Slightly you will not die, but at least rather don't penalize the a borrower by charging a person higher during these unusual circumstances.
In easing the monetary policy, BOU expected the commercial banks to follow suit. However, that has not been the case, and instead the average lending rate continues to rise to as high as 20%.
Is the central bank going to curb interest rate? The governor's statement was clear. In the event that commercial banks don't follow, there is always a fallback position. That is not the first operator for the central bank or for the government, but as a last resort, the way we have seen other central banks in the world, even buying corporate bonds. In our case, we are saying, okay, in the case it goes to the worst case scenario, there is readdress in the law that actually we can call commercial bank and say, hold on, what is your problem? Can you either reduce the interest rates or we start looking at other options?
The acting deputy governor also clarified on the issue of debt sustainability, a matter that has been a subject of heated debate in the recent days.
Currently, debt is really quite low. It gives actually room for the government to borrow. However, there are risks. Now, when you talk about data analysis, public data analysis, you start looking at, if I borrow in dollars, what is my ability to service that loan? So we are saying, for example, that in the next 5 years, Uganda will need about $900 million to service debt every year, external debt. So if you need around $900 million, the question is, how do your exports match that ability? Now, when you look at our exports, excluding re-exports and gold, you see that probably our exports will remain in the range of 2 billion to 2.8 billion. So which means that debt service to exports will be above 30%. So that is a risk.
In the event that commercial banks continue charging excessive interest rates, BOU has a constitutional mandate to prescribe the minimum or maximum interest rates. Dennis Igoa for UBC Business.